This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Crude inventories fell sharply last week amid lower imports and a jump in exports, the US Energy Information Administration said on Wednesday. Crude oil stockpiles fell by 6 million barrels to 420.7 million barrels last week, the EIA said, compared with analysts' expectations in a Reuters poll for a 1.8 million barrel draw. Inventories at the Cushing, Oklahoma, delivery hub rose by 419,000 barrels in the week ended August 15, the EIA said. Oil futures continued to trade in positive territory following the report. Global Brent benchmark futures were at $66.37 a barrel, up 58 cents at 10:52 a.m. Eastern Daylight Saving Time, 14:52 GMT, while U.S. West Texas Intermediate futures were trading at $62.83 a barrel, up 48 cents.
Oil prices rose on Thursday, bolstered by signs of strong demand in the United States, with uncertainty over efforts to end the war in Ukraine also lending support. Brent crude futures were close to a two-week high and up 46 cents, or 0.7%, to $67.30 a barrel at 0817 GMT. U.S. West Texas Intermediate crude futures rose 50 cents, or 0.8%, to $63.21 a barrel. Both contracts climbed over 1% in the prior session. Russia said on Wednesday that attempts to resolve security issues relating to Ukraine over the war without Moscow's participation were a road to nowhere.
Moving on to the top news in the energy sector.
Onshore fuel oil stockpiles in Singapore eased for a second consecutive week following a recent surge, official data showed on Thursday. Residual fuel inventories fell 6.5% to 23.04 million barrels, 3.63 million metric tons, in the week to August 20, logging its lowest in 8 weeks, based on Enterprise Singapore data. Despite the drawdown, inventories remained well above typical averages amid strong imports. Fuel oil imports into Singapore onshore tanks totaled nearly 1.4 million tons in the week of August 14 to 20, nearly doubling from the previous week.
There are early signs that some Asian countries are stepping up their imports of U.S. liquefied natural gas, LNG, as part of trade deals with President Donald Trump. Asia's imports of the super-chilled fuel are on track to hit an 8-month high of 2.01 million metric tons in August, according to data compiled by commodity analysts Kepler. But of far more importance is that Kepler estimate that Asia's LNG imports from the United States will surge to 3.61 million tons in October, which would be the second highest on record behind the 3.75 million from February 2021. There are caveats to the October prediction insofar as these are cargoes that have been arranged on a preliminary basis and may not actually load. Next, we have the top news in metal markets. Aluminium outperformed its peers on Thursday as lower inventories and signs of improving demand in top consumer China bolstered sentiment. The most traded aluminium contract on the Shanghai Futures Exchange rose 0.49% at 20,620 yuan, $2,872.83 per metric ton. Benchmark 3-month aluminium on the London Metal Exchange was little changed at $2,575 a ton, as of 0700 GMT.
Iron ore futures rebounded on Thursday as a mandated production cut ahead of a military parade in China seemed to be less severe and shorter than expected, allaying demand concerns. The most traded January iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.98% higher at 772 yuan and 50 fen, $107.63, a metric ton. Both the benchmarks had fallen for 6 straight sessions through Wednesday, weighed by demand concerns as steelmakers in top Chinese production hub Tangshan were required to curb production for better air quality in Beijing for the military parade on September 3 commemorating the end of World War II.
We will now look at the top news in the agricultural sector.
China has suspended imports for Argentine poultry products from August 20, just 5 months after lifting a 2-year ban. The notice of suspension, which was posted on a customs website, did not state a reason for the move or how long the suspension might stay in place. Beijing has also banned on poultry and related imports from its largest supplier, Brazil, since May and on imports from Spain this month, with authorities noting bird flu outbreaks in both countries.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.